Welcome to the deep dive. And maybe buckle up for this one. Today we're diving into something you've probably noticed, that recent roller coaster ride in oil prices. We've got a stack of sources you sent over, and our mission really is to unpack what's behind this intense volatility. What does it actually mean for the global economy, for you, and crucially, what should we be watching for next? You might be surprised how these big geopolitical events connect right back to your own wallet.
Yeah.
So let's start with that initial jump. Prices climbed pretty sharply over about 48 hours. What did our sources say really kicked that off?
Yeah, things move fast. We saw Brent Crude, that's the international benchmark. It surged past $78 a barrel. And WTI, the U.S. one, got close to $75. The source is pretty clear. It points directly to the U.S. military strikes on Iranian nuclear facilities. That was the spark.
Okay, the strikes.
Exactly. And traders immediately started thinking, okay, supply disruption potential. They braced for it.
That makes sense. And it seems like those fears, especially around Iranian retaliation, really ramped up quickly. How big of a deal is that potential disruption, especially when we talk about the Strait of Hormuz?
Oh, it's huge. You have to understand, the Strait of Hormuz, it's this critical bottleneck. Nearly 20%, almost a fifth, of the entire world's oil supply has to pass through there.
Wow, 20%.
Yeah. So any threat, even just the idea of a threat to that strait sends, well, shockwaves through the energy markets. It's just such a massive volume of oil at stake.
Right. But then, almost as quickly, things seem to calm down a bit. As we're talking now, prices have actually dipped back. We're seeing around the $72, $73 range. So does that mean the market thinks the immediate danger's past? Is it cautious optimism or just a pause?
Well, that's the million-dollar question, isn't it?
Yeah.
The market's current feeling seems to be maybe immediate widespread escalation can be avoided for now. But this kind of swing, it brings up the bigger picture.
Yeah,
What are the knock-on effects for the global economy?
exactly. Let's talk about that.
Okay, first off, inflation. It's pretty direct. Higher oil prices mean higher fuel costs, higher transport costs, and that eventually means you pay more for almost everything. Groceries, plane tickets, you name it.
Right, the stuff you buy every day.
Precisely. Second, it affects what central banks do, like the U.S. Federal Reserve. If inflation looks like it might heat up again because of oil, any plans for, say, aggressive interest rate cuts could get put on hold, delayed.
Okay, so it impacts borrowing costs potentially.
It could, yes. And third, you see it in investor mood. Stock markets got pretty jittery, opened on edge after the news.
Hmm.
Though, interestingly, energy stocks themselves saw a bump in trading volume.
Okay, that paints a clearer global picture. But let's drill down a bit. What about specific countries, particularly those that import a lot of oil?
Yeah, good question. Take India, for example. It's the world's third largest oil importer.
Yeah.
For a country like India, sustained high oil prices. That's a real problem. It can weaken their currency, the rupee. It can widen their fiscal deficit. That's the gap between government spending and income. And ultimately, it often leads to higher fuel prices right there at home for ordinary people. It's this kind of unique pressure on developing economies that sometimes gets lost in the big market headlines. They face tough choices.
A really difficult balancing act. So looking ahead now, beyond these immediate ups and downs, what are the key things we should be watching? What tells us where prices might go next?
It really boils down to a couple of critical factors. First, what does Iran do next? Is there going to be a military response? Could they actually try to interfere with shipping in the Strait of Hormuz? That's the big one.
Okay, Iran's reaction.
And then second, how do the U.S. and Israel react if Iran does retaliate? Until we get some clarity on those questions, frankly, expect oil prices to stay volatile, very sensitive to headlines.
It really drives home how oil is often called the lifeblood of the global economy. And right now, that lifeblood is under some serious pressure from politics, from conflict, from just plain uncertainty. So, here's something to think about. What could this ongoing volatility, these swings we're seeing, actually mean for your own budget day to day? What about your travel plans later this year? Or even thinking bigger, your longer term financial stability? It's all connected.